Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Getting Started with Thinkorswim. And today, we're focusing on those who are just new to Thinkorswim. They're trying to learn how to place their options trades on the platform. So we're going to talk about how to access the Thinkorswim platform, how to place a number of options trades, calls and puts, short calls and short puts, multi-leg options strategies. Should be a lot to cover. Don't try to memorize every single click. It's okay. This session is scheduled to be added to our playlist afterward. But before we can get to any of that, though, let me first of all say hello to everybody joining us out there on YouTube. See a lot of familiar names. I see some that are new. So hello there, Caroline and Gabriella, JDLMI, Chen, yes, and video, HEM McCrae or HE McCrae. Who else is here? Olga, always good to see you. Rich, JV Texan, on and on the list goes. Thanks for joining us today. For those who are returning, thanks for being here every week and contributing. We definitely appreciate that. If you're here for the very first time, I do want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy the recording. That's a great way to watch these webcasts, but you're certainly invited to join us in our live stream audience. If you'd like to be here, this is a Wednesday webcast series, and we kick things off promptly at 2 Eastern time. Now, I also want to let my live stream audience members know that my very good friend, Barb Armstrong, is going to be hanging out in the chats. She's already been there. She's active. What she's doing is watching for any questions that I can't get to just during the flow of the presentation. Thanks for having my back there, Barb. Barb and I have been working together for years and years and years. So Barb brings a ton of experience to this discussion. Barb and I would also like to issue an invitation to everybody listening, whether it's live or you're watching on the recording, to follow us on social media. You can find us both on X. We're both very active there. You can find Barb there at Barb Armstrong CS. You can find and follow me on X at Cameron May CS. You can also find and follow us on LinkedIn. So for my account, you just find me at linkedin.com/in/Cameron May CS. But let's get into this discussion. As we do, of course, options carry risk. So please do bear these important disclosures in mind. All corporate or issuer names and market data shown are for illustrative purposes only. They're not a recommendation, an offer to sell, or a solicitation of an offer to buy any security. Options carry a high level of risk and are not suitable for all investors. Schwab does not recommend the use of technical analysis as a sole means of investment research. Investing involves risks, including the loss of principal, and any investment decision you make in your self-directed account is solely your responsibility. All right, so what are we doing today? Again, let's set an agenda. We're talking about trading on Thinkorswim and specifically talking about trading options. So I want to start from the very beginning, show how to access Thinkorswim, how to get logged in, how to navigate the different tabs on Thinkorswim so that we can place single leg options orders all the way up to multi-leg options orders. Now, I realize that some of you aren't going to be terribly familiar with options. Maybe you're at the very start of your personal learning curve. So I do want to start things off today with some resources for you, some additional resources to not only learn about how to place a trade, but there's a whole bunch that comes before that, the planning of an option. And I put together a series of lessons for you that you can just go through. It's a little video series. It'll teach you all about options, okay? So let me show you that. I'll show you the downloading of the Thinkorswim platform here in just a moment. But let's pop over here. Let's go to the YouTube channel. Now, if you're new and you haven't subscribed to our Trader Talks channel on YouTube just yet, pop down below, click on the subscribe button. It only takes a second to do that. It doesn't cost anything. But our YouTube channel, Trader Talks Schwab Coaching Webcasts, is where you can join these live streams like we're having right now. But you can also find the playlist for previous discussions. For example, this is part of an ongoing webcast series, and you can find all of the previous webcasts right here under playlists. So let me show you two playlists that I think pertain to this audience right now. One is to teach you about options, and the other is to teach you about the platform that allows us to trade options. So let me go to playlists, and I'm going to scroll right on down to the bottom. We have a whole bunch of different playlists here on our YouTube channel, but mine are kind of tucked away down here at the bottom. First of all, we have our Getting Started with Thinkorswim playlist. So if you click on View Full Playlist, this will show you a whole series of videos building right up to today. But the ones that I want to draw your attention to are a series of structured lessons to go through top to bottom, left to right of the platform, just show you how it works. and those are organized into lessons. So you're going to scroll down through this list of playlists or this list of webcasts and look for a keyword lesson. Look for my face and the word lesson. It'll only take you a few seconds. I'll just scroll down until I see it. And there it is. See that? Lesson 1 of 8, lesson 2 of 8, lesson 3 of 8. Olga says these are great. Thank you, Olga. Yeah, just start there on lesson 1. Now I have a similar set of lessons for learning specifically about options trading. So this series of lessons is for learning about the platform. Our second series of lessons is about learning about options. So let's just hit the back button here. Let's go back to the home page for our Trader Talks channel. Scroll on down to the bottom again. And right here is my Getting Started with Options series. And if we click on View Full Playlist, just do the same thing. Look for my face along with the word lessons. Let's scroll down. And there, we should be about there. There it is. Lesson 1, trading options, building block number 1, long calls. So we go through long calls, long puts, short calls, short puts, multi-leg strategies, how to pick a strategy, all of that. Okay, so there we go, a couple of great resources for you. So now let's get to the trading platform. And I've already cheated. I've already launched mine. It's right here. We'll come back to this for just a moment, but this is what's known as Thinkorswim Desktop. It's trading software that can be downloaded free of charge from within your Schwab Online account. So here's how that's done. You just log into your Schwab Online account. So this is sort of an empty example account. And you pop up here to the Trade tab. And from here, can't miss it, click on Trade. Right there it says Thinkorswim Desktop. We click there, scroll down just a bit. You'll see a great big blue button, learn how to enable Thinkorswim. And then you just follow the on-screen prompts and that'll get you rolling. So what that does is it downloads this software to your computer. It creates a link on your desktop or it puts it in your computer start menu and you just look for Thinkorswim, okay? And when you launch that Thinkorswim, you're going to wind up with a pop-up screen that'll ask you for a username and a password. It's just your Schwab username and password. No special credentials required aside from those. Down at the bottom, it'll ask you whether you want to do some paper money trading, which is just a sort of a mock account or a practice account, or you want to do some live trading. So you just make your choice, click log in, and off you go. And what I've done here is I'm logged into the simulated or paper money trading environment. This is a great place to learn new tools, to learn techniques where there's no real skin in the game, but it functions almost identically to the live platform. So that's what we're going to be doing today. Tiffany says, do any of the lessons show you how to set up your charts? They certainly do, Tiffany. I spend an entire 45-minute discussion in that Getting Started with Thinkorswim series on how to navigate your charts and how to get them set up. Yep, so check that out. All right, but let's get into the placing options orders. And for our first example here, we're just going to use Amazon. Let's say that we're a trader. And our trader noted that the stock has been running up and pulling back and running up and pulling back, and it's run up recently, it's pulled back, and it looks like it's on the move again today. And maybe they're looking for a proportionate move to the upside to what they've seen several times in recent history. Maybe they think the stock might go up here to $285, so they have the plan. Maybe I want to go buy an option, but I don't know how to do it on Thinkorswim. Let's go buy a call option, all right? So obviously we want to place a trade, so we're going to go to the Trade tab. So as I click on the Trade tab, if you don't know, if this is your first time using it, it's just going to look like a big white screen. So you just come up here and you type in your symbol or type in the name of the stock. You can just start, for example, type in Amazon and the menu will propose some potential choices for what you might be looking for. So let's choose Amazon here. And this gives us Amazon quote information, and this is tradable for stocks. But down below it provides something known as the option chain. So the option chain contains all of the available options contracts for Amazon specifically, some of which are expiring just today. Today happens to be Wednesday, and we have these new options that expire on Mondays and Wednesdays. Or we can go all the way out as far as maybe, in this case for Amazon, out 947 days. So let's pop back up here. And let's maybe look at, you know, if we look at our chart, it looks like this move might happen over the course of just a few days or maybe a couple of weeks, who knows? Maybe it doesn't happen at all. But let's say that our trader here is looking to get a sufficient number of days to give that time to move. Let's look at maybe this 36-day contract. Now you'll notice that it is in a black font, whereas all of these previous ones were in purple. The purple just indicates that these are what we call non-standard expirations. In other words, these are what would have been not recently introduced, but more recently introduced, the weekly contracts. So I'm going to go out here to the traditional third Friday monthly contracts. The next one expires on the 18th of June. That's for 2026, 36 days from now. And these are standard contracts representing the potential exchange of 100 shares of stock. Now, let's get to trading. I'm going to click on the little down arrow. You'll notice there's a little caret here. Just means whenever you see one of these on Thinkorswim, if you click on it, it's going to reveal more information. So as I click on that, it exposes the June contracts. Now there are a whole bunch of these. I've limited it to just 16, sort of centered around what we'd call the at the money strike. We can expand that. Let's say we want to move it out so that we're seeing 20 or 10 that are in the money, 10 that are out of the money, or we can go on from there. But let's just say that our trader here, looks like Amazon's trading around $270. One Wendy Wonder says, do you have any training on options trading on the Thinkorswim mobile platform? We certainly do. What you can do, here's a good suggestion for you, Wendy. Go to our channel. Let me just kind of slide on up. I don't mind doing this for just a moment. So here's our channel. There's a little search button right there. Just type in the word mobile and it'll bring up a whole bunch of videos related to that, okay? Anyway, but let's place a buy order for a long call option for Amazon. Now, I'm just going to go with the, let's go with the $270 strike. That's closest to the current price of the stock. Means that our traders may be looking to enter into a contract that gives them the right to buy 100 shares of stock for $270 through the 18th of June. But I'm just going to click on the ask price. When I want to buy something, I might ask that person, how much are you asking for the thing you're selling? And then you pay the ask price. That's the way stocks work. It's the way options work. So we're going to look at this ask column. And if I just click on that ask price, that actually brings up a buy order here. And it's actually potentially a complete buy order. But let's go right through this green buy order bar. So it's a single option. We're preparing to buy it. 10 contracts. That would be for 1,000 shares. Let's just change that to one contract. So the default here, what you should note, is going to be for 10 contracts each time. Some people don't prefer that default. Let's change that. You can pop up here for the general settings for Thinkorswim. I can go up to this little gear icon. A gear means there are some settings that can be changed. It's kind of like on your phone, it's a gear. So if I click on this, go to the application, the Thinkorswim application settings. Let's go to our order defaults and change our options default quantity to just 1. So if I click apply, from now on, whenever I click to buy or sell something, it's going to bring up an order for 1 contract by default. All right, so this is going to buy, we're trading on Amazon. There's our expiration. There's the strike price we selected. There's the call option. And then we can set a price. So let's go through a couple of different order types here. We can do a limit order. We can do a market order. So first of all, a limit order is when we're telling the system the most we want to pay per share for that option. So it looks like we're trading somewhere between $10.40 per share on these contracts. $10.50 that, well, the 10.40 is sort of the mid price. Maybe it's down to as low as 10.30 if we can get filled at the bid price. But how about we just say, yep, we're happy to pay 10.50. Or maybe let's do this. Let's say we're willing to spend up to 10.60. This is just setting a maximum. It's not saying that we will pay 10.60. That's just saying that that's the most we're willing to pay. That's our limit. And then we can set what's known as the time in force. How long do we want this order to remain in effect if it hasn't filled yet? Do we want it to expire at the end of the day, or do we want it to be good till canceled? That's what the GTC means. I think for this order, we're going to select a day order. And actually that order is ready to go. So we've done a lot. Actually, one other thing I want to discuss before we submit that order is we could have submitted what's known as a market order. What does a market order mean? It just means, just like with a stock order, market order means, hey, I want to buy this call option. I'm willing to spend whatever it takes to get it. Whatever the market demands right now, I'll pay that. Obviously, you can see the risk in doing that. We might not be thrilled with the price we pay, but it does increase the likelihood of a faster fill. So there are pros and potential pros and cons there. So I'm going to switch this back to a limit order. Let's keep it there at $10.60. And I'm actually going to click confirm and send, and we're going to be actually placing this order right now. Now, when we click on, let me just move this up a little bit so you can see what we've done. So when we click on confirm and send, we haven't actually sent the order to market yet. We get a pop-up here known as the order confirmation dialog box. So no reason for panic yet. We haven't committed to anything. There's still a chance to back away, but this just allows us to confirm that this is what we want to do. So we're going to buy one Amazon 18th of June, 2026, $270 call for $10.60. That's our limit. This is to open a new trade. There is an infinite reward potential on a long call. The maximum loss is how much we've invested, which would be, if we buy it at 1060, $1,060 on 100 shares. This will also tell us any commission associated. So there's a 65-cent commission on this trade, bringing the total maximum cost to $1,060.65. Well, Leah says, how do I get my trade when it'll look like yours? So Leah, if you're using Thinkorswim, the download that I suggested, because there are other versions of Thinkorswim. There's a web-based version. There's a mobile version, like an app for your phone. Those are different. So this one is that downloaded software. But I will admit, mine has the white background. Let me send this order off. Okay, we're going to click send and see if we can get this to fill. But yes, one of the general settings I've changed up here is the look and feel. I changed the color. So the color scheme, by default, you're going to see a dark background like that. So your platform will look like this. I prefer the lighter, so I have made that change. So my apologies if yours looks a little bit different than mine when you first log in. That's what's going on. All right. So we've placed that order. It doesn't appear to have filled yet because we'll get a little pop-up letting us know that order has filled. The place that we would go to track either our order or if it has filled, the position is the monitor tab. So we'll go to monitor and we can look at working orders. This order is working. It hasn't filled. There's that order. We're offering to spend $10.60. Right now, it looks like the current market price is right at about $10.60. I think there's a good chance we might see this fill soon. We'll see. But while that's working, we might need to, no, I think we'll let that continue to work. You know what? I might do something I haven't done before. Let's do this. Let's right click on that order since it hasn't filled yet, and we're just going to cancel it and replace it. Now it's actually sitting in the background, still working, still trying to fill until we've replaced it. But I'm going to replace this with a market order, just in the interest of trying to get it filled quickly so I can move on with the next concept, okay? So yeah, risk in doing this, but let me click confirm and send. Oh, never mind, it filled. I told you, it was still working, but you can cancel and replace an order. So that's what I was about to do. We're not going to do that. All right, so we'll just delete that. But we filled that order, and now it's sitting down here in our portfolio, just tracking its performance. Now, I've directed that trade into our example IRA. Now, if you're following along, maybe just know that in your live account, if you have multiple accounts, you can direct your orders to different accounts right up here. So maybe I wanted to put this in my margin account. I could have selected margin, then just done the same trade order process there. I'm going to put this and other trades into our just example paper money fake IRA account. All right, so that process, explaining how to place that first call order, generally takes me the longest time because I just want to make sure that we go at a pace that everybody can follow and cover all the little things. But let's go buy a put, see how much different that is. So let's take a quick glance at a different chart. Let's say that our trader has looked at Visa. Visa had a nice pop here, but boy, it's been sagging back since then, starting to stair step downward. Let's say that our trader thinks Visa might have a bit of a headwind. Maybe they think the stock's going to go down possibly to 305, just a proportionate move to this previous move. But in any case, maybe they want to place a bearish trade known as a long put. How do we place a put? Well, When we type in our symbol here, so let's make sure that we type in Visa. We look down at the option chain. Let's just stick with the same expiration for this example. But as we click on that, you'll notice the call options are on the left, the put options are on the right. So we need to get over there to the right. And then with the stock trading around 322, what if we just go, let's stay consistent. Let's maybe go with the at the money trade. That would be right around $320. This would be giving the trader the right to sell shares for $320 for the next 36 days. To place the buy order, what do? Well, we say, hey, how much you asking for that put? Let's click on the ask price. And this creates a buy order. What's our quantity now? It goes to that default that we just changed. But now it's a single order to buy one Visa 18th of June 320 put. And we can put in a market order to buy as quickly as possible. We can put in a limit order if we want to try to control the maximum cost being spent here. Let's say in this case, maybe we're willing to go up a little bit higher. Or actually, maybe in this case, maybe our trader's trying to get a little bit better price than just paying the natural or the essentially the market price. What if they say, well, I'm just willing to spend $8.50 per share. Let's make that our limit. And I'm willing to see if that'll fill today. If it doesn't fill today, the order just is canceled. No harm, no foul. All right? That's how we buy a put. So now we know how to buy a call. We know how to buy a put. Let's talk about selling calls and puts. And what I want to do initially is to sell calls and puts to enter a new position. And that to some people can sound counterintuitive. We tend to think of selling in like when we're selling a stock, most of the time it's to exit a trade. No, sometimes we enter a new position by selling something. So let's just delete this one. We could click confirm and send, buying one Visa 18th of June 320 put, 850 limit. Read through this order dialog box. There's that commission, and we could send that order off. I'm just not going to do that. The way I back away from this, no harm, no foul, it's not even in paper money, I can just delete it. Haven't done the trade. But let's suppose that our trader wants to do a bearish trade, but instead of buying a put, they want to sell a call option. Here's how we do that. Let's just choose our stock. Let's stick with Visa, do a bearish call trade. Let's go to the 18th of June. And if we want to sell something, instead of clicking on the ask price, we click on the bid price. So if you're trying to sell anything, let's say you have a crowd of people and you're trying to sell your 1982, Ford Astro van. And you say, all right, how much will somebody bid for my van? And you sell to the highest bidder. Yep, with stocks and with options is the same thing. We typically sell at the bid price, at or near that bid price. So how about we just think the stock is going to continue to drop and we're willing to sell, let's just go with that at the money Visa call. Well, we just click on the bid price and that creates a sell order. Selling just a single position, the Visa 18th of June 320 call, and we can set a limit here. But in this case, let's say we wanted 1090. What does that mean? Well, in the case of a sell order, that means that that's the minimum you're willing to accept. It's the lowest price you will sell for. So whenever we're entering a limit order, it means I want this price or I want a better price. So when we're buying, a better price than the one that we've submitted is a lower price. When we're selling, a better price than the one that we've submitted is a higher price. So this is a minimum acceptable selling price. There we go, Bob's. My apologies, I'm not a car guy. Astrovan was made by Chevy, not Ford, so my joke kind of landed. Maybe skidded off the track a little bit. Yeah. Anyway, but let's put in a 1090 limit order. And let's just leave that good, good for the day. And we can just click confirm and send. Now, when we sell calls, let me show you something here. It's telling us, hey, Cameron, you're about to sell a Visa 18th of June 320 call, trying to get $10.90 for it. Excuse me, there's unlimited, infinite maximum loss on that trade. Therefore, can't do it. not going to be allowed in this IRA. I'd have to route this one to my margin account. But that's the process for creating, and by the way, there'd be a commission on this trade. There aren't on some types of trades, but yes, on options there are commissions. But I'm just going to hit the brake on that one. And we could do the same thing with a put. I think you get the idea. We're just going to get over the put side. If we're selling a put, maybe entering a bullish trade, just click on the bid price and that creates a put sell order. Now, each of those, if I were to just submit this one, let's just leave it as currently constructed. I'm not going to make any modifications since we know how to do that. If I click confirm and send, the system automatically knows Cameron doesn't already have a 320 put in this account. He did buy a call earlier, but he didn't buy a put. So this is to open a position. If I did this trade in the same account where I already had that option, it'll create a closing position. Let me show you that. So let's delete this. I get questions all the time. Cameron, can you put a stop order on an option trade? Yes, you can put a stop order on an option trade. So remember this, let me close this one up. Remember this Amazon call that we bought that for $10.50. That was our trade price. Ooh, looks like price is going up. The market price is now $10.72. Nice. We're up about 22 bucks right now. But let's say I want to put a stop on that trade. All I need to do is in the same account where I bought that contract, I just go back to the same position. There are a number of ways I can do each of these trades, by the way. I'm just showing one way to do each of these. Lots of different ways throughout the platform we can place these trades. But right down here, it's saying, hey, Cameron, you have a position here on the 18th of June. And if I scroll down, there's a reminder. Your position is at this strike. So if you put in an order at that strike to sell, let me click on this sell order. This is automatically pairing it with the position that we already have. And let's just say, you know what, I bought it at the market price. No, I didn't. I was about to put in a market order and it got filled on our limit. Let's put in a stop order. What does a stop order mean? Stop means, hey, stop the bleeding. This thing's going the wrong direction if we're using this as an exit order. We can actually do what are known as stop entry orders. This is going to be an exit order. But let's sell this one Amazon 18th of June 270 call, and we're going to put in a stop order, and we paid $10.50 for it. Let's say we're hoping the stock or the option continues going up in price. If it starts to go down in price, let's close it up. How about we're willing to risk half of that position? So we bought it at $10.50. Let's put in a stop at $5.25. And I'm going to make that order good till canceled because it's not very likely that it actually drops all the way to $5.25 today. If it ever drops there, I'm going to put in a good till cancel order, which just remains in effect through the duration of this contract. So I'm going to click confirm and send. And notice it's saying sell this one Amazon 18th of June 270 call at a stop of $5.25. This is to close the position. Now it's going to tell us max gain, max loss. That's okay. We don't worry about that because this isn't creating new risk. But I do need to emphasize that a stop order is not guaranteed. If it drops down to $5.25 and it's going really fast and it skips beyond that, it's possible this might fill at an even lower price. This just is an order that if we happen to fall to $5.25 or below, get us the heck out. And that would generate another commission, close out that position. And if we send this off, now we have our position here, but there's an associated working order right up here to close that call out if it happens to fall down to a value of $5.25. All right, so what we're doing here is learning the individual pieces of learning how to place single leg transactions. Buy a call, buy a put, sell a call, sell a put, placing a stop on that. Let's get a little bit fancier now. Is that all right? Because everything that we do out from here is going to be built on what we've already learned. So let's suppose that our trader not only had an idea that to try to manage the risk on their trade, but maybe they had what we call a price target on the trade. So I want to put in a fancier order here that has a stop to hopefully manage the risk to the downside, but also in order to take us out and give us profits if those profits manifest themselves. Here's how that would work. I'm going to get rid of this stop first. So from the monitor tab, this is where we monitor the progress of working orders or existing positions. So we can monitor our existing position down here. We can monitor our working order up here. I'm going to right click on this stop order and just cancel it. And what I'm going to be doing here is putting in a different type of order. That order that I just hinted at, not just a stop, but also a target price. Let's go back to our trade tab. And I'm going to right click here. Actually, let me show you a different way to do this. I'm going to make an executive decision, do this in a different way, just to let you know that orders can actually be placed from the monitor page. We haven't done that yet, so let's do it. So I'm going to go here to our Amazon position, and I'm going to right click anywhere on that position. Just right click on it. And I'm going to create a closing order. Now it's not just to sell right now. We're actually going to modify this. But let's create a closing order. A nice thing about doing it from the monitor tab is that tells the system, hey, I'm closing out this position. So if I have 3 contracts, it creates a closing order for 3 contracts. If we do it from the trade tab, we have to remember to put in those 3 contracts. So Gabriella says, if Amazon sells with a stop, how much money could be lost? Well, if we get filled at the $5.25, we lost half of the value of that call contract. That would be a $525 loss plus a couple of commissions that we paid. Okay, but again, a stop is not a guarantee that we'll sell at a specific price. But if you need to learn more about the way that options work, I actually, at the start of this webcast, showed a series of lessons on really learning what options are. That's not what we're doing today. Today, we're just learning how to put the trades in. But you might want to go check out those lessons. And this webcast is going to be added to our YouTube channel as an archive not too long after we finish things up today. All right. But so here's our order. This would be to sell it. We can modify it, make it a stop order. But I'm going to change this from just a single order to what's known as an OCO order. The OCO means one cancels the other. The plan here being, we bought the call and we want to either sell at a loss or sell at a profit. Once we've done that, we don't want the other thing to happen. We want one of those to cancel the other one. So the OCO designation is selected. And what I can do now is come up here and right click on this first one and duplicate that order. So it becomes 2 sell orders. Now there are other ways I could have done this. I just chose to show you this way. But this is to close these out. Let's make the first one our target price. So I'm going to leave that as a limit order. If we bought this for $10.50, let's say that our trader wants to see if they can double their money. If the stock goes up and up, it certainly could. It also certainly may not. But let's say we want to sell if we get up to 21 bucks. That would be twice what we paid. So we're going to say that's our limit. I don't want to sell for a penny less than $21. I'm going to make that good till canceled. Now, to the opposite extent, if it's not going up in price, but it said it's going down in price, let's put in that stop order. So our stop order, we had that down. Let's just be consistent. We had it down at $5.25. That's half of what we invested, and I'll make that good till canceled. So what this has now done is prepared to get us out, either if we go up or down in value, hitting price targets or stop levels. So I'm going to click confirm and send, and here's our order confirmation dialog box. We're going to sell this 18th of June call if we can double it up to $21, or oops, if it happens to fall to $5.25 or below. All right. There will be a commission if one of these orders is triggered, and I'm going to send that order off. And now I can go monitor the progress of that order right over here. We can see this up here under working orders. It's waiting to meet our conditions. And notice these 2 orders are linked together. One, if one of them fills, the other one's automatically canceled. Nifty little feature there. So I know that we're covering a lot of territory. For some, you might be thinking, Cameron, you're not covering enough territory. Can't do everything all in 45 minutes. My apologies. But the nice thing about these webcasts is they are being recorded. The vast majority of them, there are a few exceptions, but the vast majority are added to our YouTube archives after the discussion. So if you ever need to go back and revisit, replay, you can do that. Digest it. Try to follow along in your own paper money account with your own trade ideas. But let's now put on a time target. Ooh. Raghu says, hey, can you please show me a call or a put example how to execute a stop order at 20% profit or loss? So we just did 50%. 20% of this would be 1050 times 20% would be what, $3 below the entry price. So that would be 1050 minus $3. Our stop would be at 750. Did I do the math right on that? I'm starting to lose my confidence in that. No, that's not right. It would be 1050, 105. So it'd be 210 below our entry price, which would be $8.30. Yeah, there we go. But same process. Anyway, let's put in sometimes a trader wants their trade to just expire or at a certain time, or they want to enter the trade at a specific time. Let's say we'd like to buy the call, but there's an earnings announcement tomorrow. We prefer maybe not to do that right away. Now, there's not an earnings announcement on Amazon. It's just a what-if scenario. So we could do this. Let's go to our trade tab. Let's put in that order to buy a call. Same process. Click on the ask price, check the quantity, make any customizations there. How about we just put a limit? Price is going up. Let's say we're willing to spend 11 bucks now. Let's make this a good till canceled order. No, let's make it a day order. But I want to put in a condition. And the way to put in a time condition, watch what happens. Here's a nifty little peekaboo feature over here. If I go over to the far right, there's a blank square right there. But if I point at that square, there's a settings or a gear icon. It's a customization icon. Let me click on that. And this brings up a whole hidden box. So here's the way this box works. This up here is just the order we've already created. It's an order to buy one contract at $11, good for the day. But maybe I don't want to submit that today. Let me click on the little checkbox, and we're going to submit it at a future date. Maybe there's an earnings announcement coming up, and we prefer to submit it, I don't know, on Friday. Whatever. You can set date and time conditions. Now, this is your local time if you want to get really specific about what time of day an order goes in, or we could do the same thing to cancel an order. If we've submitted a good till canceled order, but we don't want to forget that it's out there, and if it hasn't filled in a week or whatever, we can just cancel it right here. There we go. JLLO says, I must have done something wrong because my order sold. Yep, what you want to do is go to your account history, see what you did. You can just track the progress of that. In paper money, it's nice, no harm, no foul. We all make mistakes. Yep. Make those mistakes on paper. Practice on paper. All right, but that's how we can put in a time condition right there. But the last thing I want to show is that sometimes traders, well, options traders are really inventive, creative people. And buying a call, buying a put, selling a call, selling a put, just isn't enough for some options traders. They like to do vertical spreads. They like to do iron condors. They like to do butterflies. And some of you are like, I don't know what Cameron's talking about. That's okay. We have webcasts on all that stuff if you want to learn it. But if you want to put in those multi-leg strategy orders, there are a couple of ways to do it. One way, let's say we want to do a vertical spread. Well, right now, it's just preparing to do single leg trades. But let's say I wanted to do a long call vertical spread instead of just buying a long call. Don't worry if you don't know what I'm talking about. That's okay. Everybody's somewhere along their own personal progress line. But I can come up here and I can choose my strategy. Let's just choose a vertical spread. And what you'll notice is it's actually paired up strikes and given a combined cost for those. So for example, if I want to buy a 265, 270 long call vertical, I can go to the ask price and click on this price is now combining the price of buying the 265 and selling the 270. I can just click on that and it creates a vertical spread. Now we can do all the other things. We can change the limit. We can change it. We can add a stop. Yes, we can. But change the quantity. This is how we can start to construct a vertical spread. Now there's another way to do that. We could actually just leave it on single. I like this. This is pretty nifty. What we can do is just hold down the control key on our keyboard and start clicking on things that we want to buy. We just click the ask price. For things that we want to sell, we click the bid price. So in the case of a 265, 270 vertical spread or long call vertical spread, we're buying the 265, click on the ask price. That creates a buy order for the 265 call. But then I can just minimize this and come back to the 270 and click on the bid price. And that adds that to the original order. Now notice I'm still holding down the control key on my keyboard. Your big visual cue is you'll see hotkeys popping up on my screen up here. But that creates that vertical spread. And then we can set a limit. How about we say, you know what, I'm willing to spend up to $3 for this vertical spread. If I can do it today, click confirm and send, get my order confirmation screen, buying one vertical, 265, 270, call vertical, $3 limit. That has a maximum loss of $300, a maximum gain of $200. There are 2 commissions to be paid because of the 2 legs, and I could send that order off. So really I can do that for iron condors, for butterflies, 3 legs, 4 legs, however fancy you want to get. Hold down the control key, click on the ask price for the options you want to buy, the bid price for the options you want to sell. That creates the order. All right, guys, we have covered a lot. Yes, we have. But we accomplished what I set out to do today. I wanted to take us through placing orders on the Thinkorswim desktop platform. So I showed you how to download the platform, how to place buy orders and sell orders for calls and for puts. We did time orders. We did price targets. We've done multi-leg strategies. That's a lot to digest. So practice this on your paper money. Everybody has to learn it, get some repetition with it. That's okay. Now, I've also shown you some additional resources to support your efforts with learning the Thinkorswim platform. And also, if you're just new to options, welcome. Hope you have fun with the learning process. I have a series of lessons to help you with that. So let me give you a couple of additional resources as I turn you loose into the rest of your day. Number 1 is, if you haven't done this yet, make sure you're subscribed to our Trader Talks Schwab Coaching Webcast channel. You can just go down below, click on the subscribe button. It literally only takes a second. It doesn't cost anything to do it. But our YouTube channel is where you can join our live streams and you can find playlists. And the 2 playlists that I've suggested for you today are Getting Started with Thinkorswim and Getting Started with Options, both of which are found right down at the bottom. I was out of the office for a couple of days, so you can see Barb's face, a couple of weeks. So you're going to see Barb's face as the thumbnail for one. You're going to see Connie's face as the thumbnail for another for right now. But here's that Getting Started with Options playlist. And I'd suggest you just scroll down and find the lessons right there. Lesson 1, Lesson 2, Lesson 3. And Getting Started with Thinkorswim. Let's scroll down one more time. Same deal. Click on the View Full Playlists and scroll down until you find the 8 lessons. Lesson 1 of 8, Downloading and Navigating Thinkorswim. Somebody asked about, is there a webcast on charting? Yes. Guide to Using the Tools and Features of Charts, Lesson 4. All right. Now, another thing that Barb and I would suggest you do is to follow your favorite Schwab presenters on social media. It is the place to connect with us in between the live streams when the camera is not on. So you can find and follow us on X. You can find and follow us on LinkedIn. So for Barb, look her up on X at Barb Armstrong CS. You can find and follow me on X at Cameron May CS. That's the guy you're looking for. There's my profile. But if you reply to one of my posts, like this video I just made, just published this today. if you reply to that post, I just try to reply right back to you. And then I do the same thing on LinkedIn. LinkedIn, I sometimes go into a little bit more detail because I don't have the character limit to deal with that X imposes on me. But just go to linkedin.com/in/CameronMayCS. Give me a follow there. And if you reply to my post here, I just try to reply right back to you. John says, what's the difference between Thinkorswim and Schwab? They're totally different. They were developed entirely separately, but Thinkorswim is just a software that can be downloaded that's intended as a complementary suite of tools and resources to those that are found on Schwab. All right, guys, I'm going to let you go. Next up is trading index options with Ben Watson. Go enjoy that. But before you do, click the thumbs up button. I see about 400 people watching the live stream right now. And it looks like 80 of you. That's awesome. Have already clicked the thumbs up button. That's like a pat on the back for your presenter, but it also does something a little hidden from you, but I see it. It gives me a nice little boost in the YouTube algorithm so that more people can find these webcasts and learn things like how to place options on Thinkorswim. So thanks for doing that, guys. I will see you in a future webcast. I'll also look for you on X and on LinkedIn, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.